Go to cash now. I'm your host, Steve Van Metre, and thanks for joining me today. Investors are making a mad dash for cash as they bet on a big crash. But are they wrong? Let's find out. Let's hover first to Bank of America, who notes that there's massive flows into cash, $62.1 billion. And get this, the biggest quarterly inflow to cash is COVID quarter one of 2020. And that's huge because what you're seeing here is investors are getting worried. They're looking at their statements, they're seeing the markets down, and the reaction is to go to cash. But that move could be wrong because what we're going to look at is the machine flows are about to trigger to the upside. And what will happen is you'll see is investors will be chasing that cash back into the market to the upside. It's called a bear market rally. Let's continue on. Let's head over to Goldman Sachs. Tactical flow of funds. We have their November report. Really, the numbers have not changed hardly at all from last week. We note that in a flat tape means stocks go sideways. Their machines, they estimate, are buying almost $62 billion worth of global equities. If the market goes up, look for them to buy even more, north of $80 billion. Market really rallies. Then they're going $90 billion. Again, this is over a 1 week period. What we're seeing here, market goes down. They're still buyers. Market goes down a lot. They're still buying. And this is a key point for Goldman, saying that systematic strategies are modeled to buyers in a big down tape, the largest modeled equity demand in the past year. And so this is a key point because the way these machines work is as they're in short positions, their trigger points to cover those shorts go lower and lower and lower to protect that position. We see the same thing here at Nomura, who notes that their machines have started just to move slightly back off their short positions, but won't be looking to make a bigger move until the S&P gets over 4,000. How about TD Securities? They're looking to actually start to buy or cover their shorts here as we get into the mid to high 3,700 on the S&P. So what you can see is retail investors running to the sidelines saying, okay, I'm good. And now all of a sudden what you're going to see is a lot of systematic buying to drive the market higher. If it pulls that off, watch for stocks to shoot up and retail to chase. Let's look at the momentum screens. And what do we have here? Looking on the S&P 500, momentum's positive. We got the RSI, or relative strength indicator. It's at 50. We want to see that above 40. MACD's got a positive cross. Momentum Timer Pro is flagging 14 consecutive buy signals, almost 3 trading weeks here. And look at this. Here's my note. No position, but if you get one, start building position. You see the S&P close higher on Monday. That's going to be some positive confirmation. Upside target 388 to 395. Current position is 376. Downside target 365 to 366. That is a dot, but it shouldn't be a dot. As we look at Momentum Timer Pro, we notice the 1 month signal is shooting higher. There's still a 3 month signal setting at a sell minimum. We're going to look for that to flip to a buy minimum. That is a strong confirmation. Let's take a look at the charts here and see what's going on with the S&P 500. And all it's doing is moving between supply zones. And here we're on a 6 month window. And what we can note, Momentum Timer Pro is picking up this bottom here and saying, look, the probabilities are starting to increase that the next move for the market is up. You can see the volume profile line. This is the overhead target. I still think we can even get up in here to the low 400 range. Downside target just being down here a bit below into that 365, 366 range. But notice, and I want you to see this, if we go out to the 2-year chart, notice how buyers have been all along this whole zone here providing support. So they're holding here again. We look back on Friday, buyers came in, held that zone as the market came down. Look for this to move up, look for the machines to jump in, and that's the catalyst for the beginning of a bear market rally. How about Invesco QQQ? We know tech stocks. I note the momentum is quote unquote negative only because we have one consecutive daily sell signal on Momentum Timer Pro. RSI is still above 40. The MACD could flip back within days now. Again, I'm looking for a position to take here. If MTP flips positive on the daily, that would be the confirmation I'm looking for, because again, what am I seeing here? And similar to the S&P, it's lagging a little behind, and I think there's more upside in tech. We have a buy mid on the 1 month, and we have a sell mid on the 3 month. I'm going to look for this to go to a sell minimum, showing that there's building strength here behind that position, and puts the upside target at 291.50 on a chart. Where's that would be? That would be right up here in the supply zone. I think tech got a little bit too oversold and pushed down here. I know it doesn't confirm that on the RSI, but I think we got a little bit too much selling. We know the buyback windows are closing out for a lot of these tech companies. They're going to come back in and put support under their stock, and I'm looking for that to move here to 291. We'll zoom out. And I eventually want to see potential 344. If we get enough strength, behind this move in the market, we could actually see, even something close to all-time highs. Is that unusual? Not entirely. Would it be a shock given the underlying economic data continue to deteriorate? What would be the bet? Is a Fed pause or pivot in December? Look for this catalyst again. Seasonally, Santa rallies. There's a reason we call them that, because they're pretty strong. All right, let's take a look at the bond market. Again, not a lot of change here either. Goldman notes, again, pretty much unchanged, that they're still buying over the next month, no matter what. If bonds just go sideways, they're still buying, not quite $1 billion a day. Down tape, they're buying even more. So that's strong. These machines are looking to buy. If bond market starts to move higher, they're going to take big positions using 142 billion. That's a lot of trading. What do we note from Nomura? Nothing really in terms of them covering their short positions yet, but they're inching closer to that. How about over at TD? We could see in a matter of days, if bond prices go up just a little bit, we're going to see them start to just a little, and this is the key point, just a little bit of short covering can push this, because remember, the bond market has got a lot of heavy short positions on it. So if these machines start to cover, it could put some pressure on that, cause some upside, and the next thing you know, they start buying quite a bit. All right, let's take a look at Momentum Timer Pro. Again, nothing to be excited here in terms of looking to take a big leap into that. We've got the iShares 20+ Treasury Bond Fund. Momentum still negative. RSI is trending back down to 34. MACD sitting on a positive cross. One consecutive daily sell signal. Upside target, we're going to keep this pretty light in terms of 97 to 98. Downside target just below. And only reason is there's just, again, until these machines start to really put some support under there, if you're a trader, that's what you're looking for, to see someone else buying behind you. So we really want to see this thing get up here into this 99 to 100. That's where we'll start to see the machines start to work a little bit more at short covering. And then, of course, you really want to look for longer term to break above this 114. There should be a massive amount of shorts here that get unwound, send price up. So kind of put this on your longer term radar, maybe intermediate term radar for now. But since we're talking bonds, one thing that, of course, we got to get to gold first, but Bank of America noted today there's a lot of flow into high yield bonds. We'll look at that in a moment. Let's take a look at gold. We're going to see some short covering here. Now, based on Friday's price movement, these machines are short. They're going to look to buy. And again, subscribers to Momentum Timer Pro, we've been talking about a trade on that and an update here for them on Sunday. So if you're a subscriber, log in. There's a video waiting for you. Let's take a look at GLD. RSI sitting at 43. MACD's got a positive cross. 2 consecutive days of actually sell signals, but that actually should be 1 consecutive day. Didn't update that. But anyways, we're seeing more buy signals here. We have a buy minimum on the monthly. I look for that to accelerate. I'm going to watch for this 3-month window to go to a sell minimum. No position, but I'd be looking at this, putting this on my radar as well if you're a trader, for sure, because look at this. You've got a bottom forming here. So you got a nice move here off Friday, Thursday, you see gap down, came up, and then Friday, massive gap higher, price rallying, closing above its 50-day. So this is positive. I'm looking for this to start to break higher, and I think there's a lot of opportunity there. So, you start to get this case where you see maybe an everything rally. You could see stocks rally, bonds rally, commodities rally, and that happens in bear markets. Now, let's take a look at high yield bonds here for a moment as we wrap up the show, because a lot of people wouldn't normally look at the junk bond market. They're paying big fat yields, but the other side is highly correlated with the equity market. See stocks rally, look for bonds to go with it. Here you can see iShares Trust, iBox High Yield, HYG, RSI is positive, momentum overall positive, MACD is positive, Momentum Timer Pro, 5 consecutive daily sell signals. And if you weren't looking at this on Momentum Timer Pro, you got to buy max on the 1 month, and notice the sell minimum on 3 months. So what would you want to see here pretty quick? You want to see this flip to a buy minimum. There's your trigger. That's what you're looking for. Buying on a close. Here's my thought, over 74.18. And why would we want to look to buy there? Well, because that's where the volume profile line is sitting at. And notice again, you start to see the bottom forming here. You've got a 6-month volume profile, nice and shallow here, saying the buyers are very strongly coming under this position. But let's zoom out a little bit. And what I want to show you is the relationship to the broad equity market. And you can see there's the S&P 500 in purple, and it bodes very well. You see a rally in the broad equity market. You're going to see a rally in junk bonds, and you can go back out here and see there's been a lot of dumping and selling of these things. Could be a big short squeeze. That's why you should put this one on your radar, even if you normally don't trade bonds, but you like the equity market, because there is definitely some opportunity here, at least in the short term, and maybe even longer. Again, the yields, check out the yields. Yields are very attractive on that. Got some upside play. So with that, we will wrap up today's show. Appreciate all of you watching. Appreciate you being fans. I'm Steve Van Meter. Bye now.